Hello everyone, welcome back to another video. If you're new to this channel, my name is Farhan and I help POA students like you ace their exams. In today's lesson, we will practice a question from a past exam. So this question is from 2023, paper 1, and this is question number 3. So in this question, we are required to correct the errors and also find the adjusted profits after the correction of these errors, and then understand some accounting concepts which are involved. So the question is on the left hand side of your screen, and on the right hand side we've got all the workings. So as part of the workings, I'm going a bit in depth in terms of actually understanding the types of errors and the relevant journal entries which are necessary for correction, so that way you can have a clear understanding on how to handle similar questions in your main exam. So with that being said, let's begin. Risa runs a garden maintenance business. The business has a financial year end of 30 June. Whilst preparing the financial statements for the year ended 30 June 2023, Risa identified the following errors. So here we have got 4 errors which we have identified, and we are required to correct these errors and then find the adjusted profit. So you can see we are given the profit before the correction of these errors, which is $26,270, and the requirement in part A is to correct these errors and then mention whether the profit is going to decrease or increase or have no effect after these corrections are done. All right, so let's look into the first error which we have got. Motor vehicle repairs of $800 had been posted to the motor vehicles account. So here we have got an expense which was motor vehicle repairs, but we made a mistake by wrongly recording it as the purchase of a non-current asset, and we recorded it in the asset account for motor vehicles. So as you can see, expense and asset accounts are different categories to each other. So you can see the error is clearly within the fundamentals. This type of error is what we classify as an error of principle because of the wrong categories which are involved, where the expense has been wrongly treated as the purchase of a non-current asset. All right? So how do we correct this? Originally, when we would have made this error, we would have posted $800 to the motor vehicles account, which means we would have debited the motor vehicles account by $800 because we thought the assets are going up by $800, right? Now that we are correcting this, we have to reduce that assets. When we reduce assets, what do? We credit it. So we are going to credit the motor vehicles account by $800, and simultaneously we will increase our expense account, specifically the account for motor vehicle repairs, by $800. When expenses go up, we debit them. So therefore, the correct journal entry is to debit the motor vehicle repairs by $800 and to credit the motor vehicles account by $800. So what's the effect of this correction? Based on the correction we have done, we understand that there is an increase in expenses when we are debiting motor vehicle repairs, and there's a decrease in assets when we are crediting the motor vehicles account. So when expenses increase, what happens to profit? Profit should decrease because expenses and profit have a reciprocal relationship, which means when expenses go up, profit should go down because we end up subtracting more from the net sales revenue or from the gross profit. So when expenses go up, our profit should go down, and the amount that profit should go down is by $800. So within the table, how do we correct this? So for the first error, after the correction has been done, we are recording $800 in the column for amount of decrease, which means that we are saying once the error was corrected, profit is actually going down by $800, okay? Now let's move to the second error which we have got. Repairs to Risa's personal property of $150 had been debited to the business property maintenance account. All right, so here, the personal expenditure of $150 to a private property of Risa has been wrongly classified as a business maintenance expense. So this is a violation of the accounting entity theory. What's the accounting entity theory? The accounting entity theory states that the business and its owners are separate legal entities. This means that business transactions and private transactions are not to be mixed together in the preparation of the financial statements. The preparation of the business financial statements should only reflect transactions relevant to business activities, okay? We could also call this an error of principle because of the wrong categories that are involved. where we have got a private expenditure of $150, which refers to the drawings that Risa would have made from the business account, but it was wrongly treated as a business expense. So the error is within the fundamentals where the wrong categories are involved, and therefore we could also call this an error of principle. So how do we correct this? We understand that we have wrongly recorded $150 by debiting the business property maintenance account. When we would have debited the business property maintenance account, we would have done it because we thought that expenses are going up. But now that we're correcting this, we know expenses have to be reduced. And when expenses have to be reduced, we credit them. So we are crediting the maintenance expense account by $150. Simultaneously, we will debit the drawings account by $150 because the $150 that Risa has spent for private expenditure, we could say that this was taken from the business account, right? Therefore, this is withdrawal of funds by the owner and therefore reflects a reduction in owner's equity, which refers to drawings. And when we have got drawings, we debit them. So we debit drawings by $150. So what's the effect of this correction? So you see we are crediting maintenance expense by $150, which means that expenses are going down by $150, okay? When expenses decrease by $150, profit should go up by $150 because profit and expenses have an inverse relationship, all right? Now, how do we fill this within the table? So we understand after the correction was done for error 2, profit should go up by $150. Therefore, we are recording $150 in the column for amount of increase. All right, so now let's move to the third error which we have got. A credit sale to Rajiv of $290 had been posted to Ray's account. So this is what we classify as an error of commission because we have made the error within the same category but recording the transaction in the wrong account. So what do we understand by the same category? Both Rajiv and Ray are trade receivables or credit customers of the business, all right? So we made a credit sale to Rajiv, but we made a mistake by recording it in the account of Ray. So as you can see, same categories of trade receivables are involved, but the wrong accounts were used. Therefore, this is what an error of commission is. So how do we correct this? Originally, we would have debited the trade receivables account for Ray because we thought assets are going up due to Ray's credit sale. But now we know that that's not the case. We have to reduce that trade receivables rate by $290, and when assets go down, we credit it. So we credit the trade receivables account of Ray by $290. Simultaneously, we'll record the credit sale in the account of Rajiv, and Rajiv being a credit customer is also an asset, and when assets increase in value, we debit them. So we will debit the trade receivables account for Rajiv by $290. So what's the effect based on this correction that we have done? As you can see, no expense accounts are affected because only the accounts that are affected are asset accounts, all right? So since no expense accounts are affected, there should be no effect on profit. Therefore, after the correction of error 3 is done, we have to place a tick in the no effect column based on the requirement mentioned in the last line. If there is no effect, place a tick in the no effect column, all right? So there is no increase nor there is any decrease in profits. Let's look into the fourth error. Payment for insurance by $12,200 had been recorded as $2,200. This type of error is what we call an error of original entry when the error is within the numbers. So we know we had got an insurance expense of $12,200, but we recorded it as $2,200, which means we recorded it at $10,000 less. So how do we fix it? We have to increase our expenses. When expenses are increased, we debit them. So we debit the insurance expense account by $10,000, which gets added to the previously recorded $2,200 and gives us an overall amount of $12,200, which we would have originally recorded. At the same time, because we are paying for this insurance, our funds available in the bank account should also go down. Now we have to reduce the funds available in the bank account by $10,000 more, right? So when bank account goes down in value, we credit it because it is an asset account. So we credit the cash at bank account by $10,000. So after this correction has been done, what do we understand based on the effects? So debit insurance expense by $10,000 means that there's an increase in expense by $10,000, and credit cash at bank by $10,000 means there's a decrease in assets by $10,000. So since expenses are increasing by $10,000, due to the inverse relationship between profit and expenses, profit should decrease by $10,000. Therefore, For error number 4, we are to record $10,000 in the column for amount of decrease. So now we can find the adjusted profit for the year. How do we find the adjusted profit? We start with the profit that we had got before the correction of $26,270. Then we subtract 800 from it, and then we add 150, and then we subtract $10,000 again for error number 4. So that should give us 15,620 as the adjusted profit after the corrections have been done. All right, so now when you're ready, we can move to the second part, which is something that we have already discussed. Explain the accounting entity theory. So the accounting entity theory states that the business and its owners are separate legal entities. So private and business transactions are to be kept separate. And when you prepare the business financial statements, you only present transactions that are relevant to business activities. So if you include these 2 lines, you should get the full marks of 2 out of 2. Okay? Next, we have got question C. State the double entry required to record the transfer of the adjusted profit for the year to the capital account. All right, so this is basically a closing entry which we are performing. And whatever profits are left behind after all expenses are deducted, we transfer it to the capital account as part of a reinvestment for the next financial year. When capital account is increasing due to the profits which are being transferred, we have to credit it, because when capital increases, we credit it. At the same time, these surplus profits after the revenue and expense accounts have been closed are stored in an income summary account. So when we are transferring this amount to the capital account, we are crediting the capital account, but simultaneously we have to debit the income summary account, which is a temporary account in nature. So we debit the income summary account and we credit the capital account, which is basically the closing entry that we are performing. What about part D? Define the professional ethics of integrity and objectivity. So integrity is when the accountant needs to be honest and straightforward with the clients and also other accountants when dealing with professional and business relationships. All right? And objectivity is that when you make professional decisions as an accountant, you cannot let your decisions be affected by any conflict of interest, which means like you have some interest, maybe it could be financially, or you like the client or something, or you have to always make sure that your professional decisions are not impacted by any bias or any undue influence from others, such as someone threatens you. If you do not do it like that, then some things are going to go wrong. But you cannot let your professional decision making be impacted, okay? So that's what basically the objectivity theory is. You'll study more of this when you're actually attempting your chartered accounting exams. But you get the idea now of what's going on, all right? Okay, so if you found value in this content, make sure to drop a like and subscribe to this channel. I'll be uploading more videos, and if you need any other past paper questions to be solved, just post them down in the comments below. And also any other topics that you would like me to make a video on, just let me know as well. In the description beneath this video, you'll find a link to book a free Zoom call where you can discuss your online coaching requirements so that I can help you prepare for your exams that are coming soon. With that being said, I'll conclude today's lesson and I'll see you in the next one.